Well, welcome, Danny. Thanks for joining us. For those who weren't on the last call, we had sort of limited that audience on purpose the last time, because it was our first call with you. We were just getting to know you a little bit, and this call we invited the whole group, and we also told them that we would record it so we could share what happens today. So some people will be able to make it, they may not be able to make it, but looks like we've got a pretty good crowd on here already, so we appreciate that. For those of you listening, your mics and cameras are muted, so you're stuck with us three ugly people to look at. Sorry about that, but well, except for Chris, he's good looking. But
yeah, I see James just joined us a minute ago as well.
Oh, okay. James, I'm going to unmute you and open your camera up if you'd like to. There you go. You're available to unmute and jump on camera if you'd like. If anybody has a question they want us to ask, if we get to it, we will. Just type it in the chat if you would, and we'll check that out. But before we get started, I guess I did want to ask James. I was hoping he would show up if there's anything he wants to say to kick us off from the company side.
I'll jump in. I appreciate everybody jumping on. I know we just did earnings announcement yesterday, started trading on NASDAQ yesterday morning. So Brad, appreciate the audience with your group as well, and happy to jump in, and we can do Q&A or take the conversation wherever you like.
Okay. Well, I wanted to turn it over to Chris Forte to kick things off and start with some comments and some questions. Okay. Well, while we're waiting on Chris, he had asked me if he could kick it off. So while we're waiting on him, I think one of the things that I wanted to do was just kind of let you talk generally about the quarter. I did listen to the earnings call yesterday, but I had a very busy evening last evening, so I was a little distracted at times. But can you kind of give us a summary or an overview of what happened in quarter three?
Yeah, I appreciate the invitation again to speak with you guys. So we saw the full impact in the quarter of the new AI rack building contract that we signed. We announced this quarter that we had signed a multi-year agreement with our primary customer. This is the first quarter where you really saw a full quarter impact from that. As we pointed out in Q2, the Q2 numbers included a couple of one-time items that were in there. So this is really more probably indicative of the baseline. We believe that there is potential upside above what's in the AI contract, but that's kind of the baseline that we would expect moving forward, essentially looking at the minimum volume commitments that our customer has agreed to. So with that's the AI rack integration, which is kind of one of the larger growth areas for us right now. The other one, as we pointed out last quarter, we expected at least $50 million of procurement revenue this quarter. We actually did a little over $60 million. It's not wide margins in that business, but that's still, even when I look at it on a gross basis, regardless of how we recognize it on books, some of those are recognized net, some of them are in gross. I went into excruciating detail on that on the call, so I won't do it again here. But on that basis, when I look at just the gross value of those transactions, they were up, I think, 125% year over year, and the margins expanded on that from 4% to 4.4%. So pretty happy with that. Because of the bookkeeping or how we've got to account for it, unfortunately, it then makes the overall margins look worse, even though the majority of that's really just because of the growth in the gross transactions of procurement activity. And then the facilities management business grew about 8%. The margins were a little bit thinner in this quarter. If you think about that one, while it's not the facilities management or the maintenance contracts that we've got in there, they're kind of the annual renewal and the annual maintenance of modular data centers that were previously deployed. Those are generally renewed once a year, and it's very similar to a warranty. even though it's not phrased as a warranty. If you think about that, most months you're going to have a pretty good wide margin. Every once in a while, you're going to have one of those that will have $80 or $100,000 expense that's needed on that one modular data center, which can do a spike in some of your expenses where you don't necessarily anticipate that going on in future periods. So where that dipped, the margin on the facilities management business dipped below 50% this quarter, I would anticipate that to snap back up, into the 50% plus margin range. And then the other that we pointed out, while the gross dollars of operating expenses have grown, SG&A and operating expense, as a percentage of the gross profit, we've gained efficiencies quite a bit. So where you see a percentage increase in gross profit, you see a much larger percentage increase in net income or even operating income once you flow through a smaller percentage increase in those expenses. So I see that as a good positive sign of scaling in a way that you want to scale. And I see continued opportunity to do that as we continue to scale. Yes, we'll end up having to build out the SG&A and operating expense to support the business, but I anticipate continuing to scale that at a slower pace than the revenue itself.
Man, you're so good.
Miss any hot buttons that you were looking for?
You're so good. You covered, a third of my questions already, I think. So,
but it's the same questions that I have when I look at the business, right?
Yeah.
And hopefully you guys saw too. I'm not sure why we as a company have historically been, I guess, a little more cagey in releasing some of the information about procurement business so that you could spike that out separately from the systems integration. I put a great deal more detail in the 10Q, especially. So if you haven't looked at that, I'd point you towards that to be able to really kind of dissect the pieces of that. I tried to go beyond that, and unfortunately, my auditors pointed out, by the way, you've got to reconcile every one of those numbers back to a GAAP figure. And my GAAP to non-GAAP reconciliation was like 2 pages. So we stopped at gross profit where we put it there.
Yeah, I did look through the 10Q last night, so I appreciate that. Chris, you're back with us?
Yep.
All right. I'll let you roll on before I continue.
All right.
Let me mention too, Mark Gomes is on with us, and I don't know if he's available to say anything, but I always want to recognize and thank Mark and tell him we appreciate him introducing TSSI to the Breakout community, because Mark is the reason we found out about you in the first place. So Mark, if you're available and want to say anything, jump on. If not, I'll let Chris take over. All right. So maybe he'll get a chance to jump in later. I know he's traveling today, so I know he's listening, but he might not be able to talk. Go ahead, Chris.
Yeah, Danny, I just want to say thank you from the entire community for taking time to talk to us, and congratulations on rapid growth of TSI. Bravo on that. We're going to get into a lot of number crunching today, a lot of numbers. Trust me, Breakout investors, we're a fun bunch, but we're also obsessed with numbers, and that's a feature, not a bug. Also, I think you'll be really comfortable with us because we're really big into sports, just like you. So we love sports almost as much as we love investing. So I just want to take a quick step back before we do all this number crunching and say, what your company has accomplished over the last 2 years is phenomenal, really phenomenal. This company was not even an afterthought to investors, and now you're front and center in the most explosive industry of our lifetime. You're on NASDAQ. You just had a $70 million quarter. You got a nice write-up in Barron's, and that's progress. So as an investor, speaking personally, I think it's a little short-sighted that we fret maybe too much over some of the fluctuations in quarterly numbers, as well as the met or unmet expectations when the reality is you have come a long, long way in a short amount of time on a playing field that's built on rapid technological change. Your total addressable market is booming. Your customer base is undoubtedly expanding. Fingers crossed on that, right? And but as you know, us investors, we're an impatient bunch. Do you sometimes worry that investors are not able to see the forest for the trees when it comes to quarterly numbers? How do you feel about that?
Yeah, I think you're probably not far off. We've talked about it internally, Chris. Obviously, there was a little disappointment last night seeing the after hours action in the stock and what we've seen today. But frankly, we looked at it in perspective too and said, hey, let's rewind the clock about 2 months when we were trading at $5, thinking if we could be at $8 a share, that's a tremendous growth from that point. So really, it's a disappointment more because we had gotten almost up to 13 yesterday at one point, right? So that you reset the mark, but keeping it in perspective, going from 29 cents in January to $5 a couple months ago to $8 today, that's tremendous.
Right.
Don't get me wrong. We are disappointed that it pulled back from some of the highs yesterday as well. Unfortunately, in some of my conversations with our shareholders over the last 3 months, I can't go beyond what we've got in the public domain, right? So I can point at certain things that can maybe help people try to modify their models. But if they've gotten way beyond the skis of the organization, I can only do just so much to try to help them understand the mechanics of the business so that they can draw that link to say, oh, maybe I'm too aggressive in my model, right? So I kind of anticipated a little bit yesterday, the action in the stock, just because I think the expectations had gotten a little beyond reality. But I am happy that now we've at least got a quarter out there where I can point to an entire quarter and we can all say, okay, well, that's kind of should be largely the base case for the AI rack building, where we've been operating for the last 3 months under largely the same terms for which we just signed a multi-year agreement for AI rack building. So that should help you guys in building models moving forward. We believe there's upside from there. So part of what we are building out for in our new facility that we're going to is saying, hey, not only that minimum level of volume commitment that we've been operating under, but the ability to take up to 3 or 4 times that volume. I would be quick to point out there, don't take that as 3 or 4 times the revenue, because there are portions of that revenue that really are tied to more fixed components. And then there's a portion of it that is variable, and that variable piece would scale up, but it's not dollar for dollar. If you double the volume, it's going to double the revenue. That's not true because there are certain fixed components there.
Mm-hmm. Mm-hmm. Right. Right. And you aren't opening discount tire centers here. You're building the backbone of what is shaping up to be a seismic shift in how mankind is going to operate in the future. And it must be meaningful to you to know that none of this AI revolution is going to happen without you building the infrastructure for it. So how does that energize you and Daryl when you walk into the office every morning?
You mentioned earlier we're both sports fans, and for those of you who don't know, Daryl was actually running back at Notre Dame, starter for 3 years.
Yeah.
So, I can't claim that level of athleticism, but we both enjoy putting points on the board, and our entire executive team, particularly our chief operating officer, has that same mindset where, it's a lot of hard work, but man, it's fun putting points on the board. And it's like every time you score a touchdown, you just want to score another one, right? So it's how do we push ourselves to go do the next one what's the next step? Where's the next expansion opportunity? How do we grow? It's no secret we're highly leveraged to one customer right now, and we love that. We want to make the best of that arrangement. We're embracing that, but at the same time, looking at how do we expand beyond that to say where else can we go and grow beyond that one customer relationship? Let's maximize it, but let's try to diversify that risk a little bit. That will take time. Don't bake that into an investment thesis in the next quarter or even probably in the next year. That's something that takes time unless you do something inorganic, which is not the ideal path.
Yeah. Yeah.
Did that answer your question, Chris? Or
Yeah. Oh, yeah. Absolutely. Yes. Yeah. Daryl was previously an executive at Dell in sales and operations. And I believe that's both part serendipity and part design for the company and for investors. We're really fortunate about that, as well as your strong background. Can you tell us how your backgrounds are going to make this a bigger, better company?
Yeah, absolutely. So as you mentioned, Daryl, well, you may or may not know, when he was originally recruited here, he was originally recruited as a board member. And then as he was discussing that with our chairman, that's when it was, hey, well, why don't you come over here? I think you'd be great to run the company. I think it makes sense to make a change at our CEO position, right? So that was how he came into the chairman or into the SEC CEO position. So you're right. His ties into Dell, being a senior executive, having sold the company to them, as well as running a big piece of their cybersecurity business, I think does tremendous things for the relationship. We've built relationships throughout the organization into our primary customer. So from our head of business development to our chief operating officer, having good ties in with their operations group. I've begun building some of those relationships. I've only been here about 5 months, but starting to build a lot of those ties into not only operations but finance as well. So throughout the organization, we've got that. The primary salesperson that we've got running the procurement business is also a former inside sales guy from Dell, right? So that's nice having those ties as well.
Mhm.
And with a lot of that business in the procurement business being tied to the federal government and defense, one of the other ladies that works very closely with the guy that is primary salesperson for that agreement is former military. So the ties into the military through her also, where she can go to military gatherings and speak the same language and have that same approach, I think is tremendous for us helping our customer win more business.
Yeah. Great. Great.
I would say all of that, and the fact that we see opportunities for working with other customers in the space as well, right? So without naming any specifics, I don't think, well, I can say pretty definitely it would not be kosher to bring somebody else's rack integration business into the same factory where we are working on primarily Dell equipment, right? So we could either take on a second location, or we could do on-site rack integration if we wanted to do that with somebody else. That's not to say that's an inked deal, but that's one where we see some opportunity of saying, hey, where there may be other competitors in the AI rack space that today generally do mostly on-site rack integration. That's an opportunity for us to say, hey, we've got the expertise, we know how to do it. And by the way, our current customer is largely beating them in the marketplace, partly because of the speed and the quality at which we can do that rack integration. We can use that same skill set and same expertise to help others in the marketplace also, and potentially start marching towards that diversification away from largely one customer.
Yeah, and the larger you get, I'm sure that'll be easier for your sales team to go to other people, other places, and say, "Hey, look what we've done." Is that correct?
Yeah, I think so. I think we will start getting, we already are getting more attention, right? People are realizing we're here and what we do. So I think that goes a long way towards opening some of those doors to at least have a conversation about some of those things.
Yeah, and investors are concerned about the customer base as it, hopefully that will expand. What can you say about that?
I think you're not wrong, right? Anytime you have concentration in one area, it's like owning one stock, right? You guys would never own one stock, at least I hope not. If you do, you got, as we say in Texas, you got bigger cojones than I do. But you don't want to be that concentrated. At the same time, when it's NVIDIA that you own, right? Using the analogy, then that's not a bad one stock to own when you go in the kind of tear that it's been on. So our significant reliance on our arrangement with our primary customer, while it's a little scary being tied to one customer that much, it's also been a tremendous opportunity for continued growth. So that's where we're embracing that. But I think you're not wrong. And I think in the stock price today and every day, there's probably already that discount applied to that.
Mhm.
I used to be CFO at a publicly traded company with dual class stock. All the publicly traded shares were non-voting, and they all griped about the one guy who had the voting shares. And I had to continue to remind my shareholders, hey guys, I know you don't like the discount applied to the stock because there's one guy that controls that, Phil basically controls all the voting. But remember, you got that same discount when you bought the stock also. So it's, if that's ever resolved, then I think it's only upside from there, but it's not necessarily a change.
Mhm. Yeah. I just have a couple more quick questions before I throw you over to Brad. Obviously, one of the most formidable challenges for your industry is heat. The cooling methodologies are evolving rapidly to keep pace with this, but obviously that presents a lot of challenges. But with challenges, there's opportunities. Um, what can you tell us about this, in layman's terms, about the tug of war between heat and cooling, and how will this shape your company going forward, including revenues, margins, things like
Yep.
that?
Yeah, great question. And you're right. I mean, when you think about our move is largely for power, right? We also took on some more square footage to open up additional opportunities. But really the key driver there, if we had the power in the building we were in today, we could continue operating here for several years. And to your point, when you run more power into a rack, while that means more compute power, it also means you're generating more heat, which then requires more cooling. Up to this point, most of the what we call mainstream, the traditional racks, that have been built for years, those are generally effectively cooled with air cooling. As you move to the more powerful equipment, like right now, the typical AI rack is consuming about 88 kW or kilowatts per hour. The next generation is expected to be around 121, 150, 200, potentially 300 within a couple of years.
Mm-hmm.
Once you move somewhere between the 88 and the 150, air cooling will no longer be effective enough to be able to keep up with the heat generated by the additional power. That's where direct liquid cooled is almost mandated. If you think about going outside on a 50-degree day, right, you're going to get chilled after a while. Now, think instead about jumping in 50-degree water. You're going to get chilled really fast. Like you better get out within a few minutes. Same principle, the thermal dynamics for computers. So the direct liquid cool basically is for simple terms, basically a radiator that sits on top of the chip plate, right? and it runs cold water, cold glycol and water through that plate that sucks the heat out of the chips that are all generating the heat. Just a much more effective means of cooling. So as we go to our new facility, part of what we're doing is we're building out not only more powerful cooling, but about 3 times the number of cooling stations that can support direct liquid cooled, because we anticipate that's where more and more of the overall market is going. There will still be air cooled, and we still have the ability to do that. In fact, the direct liquid cooled stations we're setting up, we are making sure that they can also do air cooled.
Right. This always comes up, so I just want to be clear about it. Dilution is always a fear of small cap investors. Dilution is a 4-letter word to to us investors of small companies. Am I right in understanding that your goal is to grow without further dilution in the short term?
Yes. The one exception I would say is because of employee stock compensation. Obviously, there's some dilution that gets created when people exercise options or as restricted stock vests. And that's a way that we can spend less on cash compensation and still attract top level talent. So there will be some dilution that comes from that. But yes, our intention is that we would not go issue new equity to raise cash. Could we raise equity at some point? Sure, if we exceed what we believe we could borrow from a bank to finance what we want to do, then we might look at that at some point. But at least in the near term, what we see, we've had very good conversations with our bank. I don't have the loan agreement closed yet for a new facility, but very productive conversations with a number of other bankers that I've worked with in the past, and that would give us the ability to fund that with traditional bank debt rather than equity.
Great. Yeah, thanks for answering that.
Yep.
It's always a touchy subject. This is my last question. For investors with a time horizon that's longer than 24 hours, what inning are you in right now? In general, in a broad sense, how big do you see this company getting over the next 2 to 5 years?
Yeah, I think
Are you able to see that far ahead?
It's a good question, and we don't have perfect visibility there, Chris, but the fact that our primary customer was open to signing a multi-year agreement there, I think, that gives us much better visibility into the future, at least for what we can expect. And it gives me a better sense, not just from my direct conversations with them, but evidence that you could point to that says that our customer sees the multi-year opportunity out there. Really, I think the time frame to which they've committed is really just the beginning. You mentioned that earlier, right? What we're seeing right now is transformational, similar to the creation of the internet, right? We think AI literally will have as big an impact as just the creation of the internet itself. And nobody really knew exactly how that was going to manifest itself ultimately. Same with AI, right? We don't necessarily know where it's going to manifest itself, but this is a train that's not getting back in the station, right? It's left and this thing's going. To your question of what inning are we in? It's a great question. Frankly, I would say we're probably in the first or second inning still. This is the very beginning, right? We just started building at scale the AI racks in the month of June. Right now, it's really the hyperscalers, the big data center AI companies that you can go out on their Twitter feeds or X feed, I guess now, and see them standing there with, next to pictures of their huge AI data centers. Those are the ones that are really investing heavily today. We and our partner both believe that they will continue to buy, but probably 12 to 18 months from now, We really see more enterprise coming in, medium and large enterprise. And that's where we see not only an opportunity for selling racks, but with the modular data center, where ultimately we end up getting annual maintenance contracts with nice wide margins.
Mm.
With the more direct liquid cooled, sorry, my phone's coming in. With more direct liquid cooled business or direct liquid cooled racks, not all of those enterprise companies will be willing to invest in a huge data center hall with all the requisite direct liquid cooling equipment. That's expensive to put in.
Right.
But what they can do is go get a modular data center for $1 million that has 6 or 8 racks in it, has all the direct liquid cooled capability built into it, the air filtration, UPS, battery backup, all that in a self-contained unit that then becomes much more efficient and be able to put in relatively rapidly. So we see the enterprise coming in more heavily, and the ultimate addressable market with the enterprise being frankly much larger than even the hyperscalers. It won't likely be 1,000 rack orders. It might be 10 or 20 or 100 rack orders. Some of them 3 racks, but we believe there's much more total addressable market there than even what we're seeing right now in the hyperscalers.
Terrific. Danny, thanks for the great commentary and insights. And we love hearing the phrase nice wide margins. So if you want to say that more as you talk to Brad, that would be great. So
it just drives me nuts that, there's only $2 million of revenue from that product line in the quarter, right? We need to grow that.
Yeah. So
And you talked a little bit about the margins being a little less this quarter, and I might have missed. Yeah, there's like maybe a one-time expense in there. Is that what you were saying?
Yeah, so let's set procurement aside, right? We've talked about that ad nauseum. I can go back to it if anybody wants to, but I think we're all in the same board, same place there. When I look at the facilities management business, yeah, that one had some not one time, but a blip in expense this quarter where we had some significant outlays of expense related to actually fixing some of the stuff that's essentially under warranty. It's not legally a warranty, but effectively it operates that way. So yeah, we had larger than normal expense in the quarter than what I would expect on an ongoing basis. When I look at the systems integration business, I do anticipate the margin in that business to continue to be where it was down a little bit this quarter. I expect that will probably continue to be down a bit compared to history, just because in order to gain the volume that we gained with the AI business, we were willing to accept a little bit lower margin and get a little more aggressive on that with our customer. So that one I would anticipate would continue to be a little bit lower going into the future.
I may have miscalculated, but I had it at 45%. Is that right? System integration.
I think are you
45% gross?
Yeah, I'm not sure what numbers you're pulling there. That seems a little high.
Okay, I'll double check that. Well, I'll rip the Band-Aid off of the big topic. Or the reason I think the stock went down, and that is that I think, at least myself, I can't speak for other people, but I have collaborated with other people, and I think I wasn't the only one thinking this way. Did some simple math on your integration services from Q2, and we, in our brains, we thought, okay, well, that was only the month of June. And maybe you do a couple $1 million there of non-AI integrations. The rest of it was probably attributed to AI integrations. So if that was, say, around 3 million, now you got a whole quarter of that. Maybe that's 9 million this quarter. So maybe thinking somewhere in that range of, say, 9 to 11 million, and it was about 7.6 million. Can you talk a little bit about how, just so we can sort of reconcile in our brain how that makes sense?
Yep.
Based on what I just threw out to you?
Yeah, I think the 7.6 is more indicative of kind of what I would anticipate rolling forward. That'll fluctuate a little bit based on actual volume that we get fed, but that's probably a more accurate estimate of where we'd anticipate being, kind of that 7 to 8 million range, quarter to quarter on a normal recurring basis. I think some of what showed up in the June quarter that you probably didn't see, we did have a little bit more of the mainstream business, right? The traditional rack building, that's non-AI in that quarter. And in the startup period, excuse me, in the startup period in the new agreement for AI rack building, there were some startup expenses that our customer agreed to reimburse to us as well, plus a margin. So that was also built into those June figures that I would not anticipate repeating.
Okay. Well, that makes sense. And then I think maybe if maybe the second part of that is maybe there was some expectation built in that that was going to be growing, say in quarter four, quarter one, quarter two, but it sounds like you think it'll be a little more flat, at least for that amount of time. Is that an appropriate interpretation of what I heard on the earnings call?
Yeah, I think that's right, Brad. I would just say, to keep that in perspective, number one, again, right, I talked with enough investors to figure out people were getting a bit out over their skis. So we were trying to help manage expectations to where we can underpromise and overdeliver. I would always rather outperform your expectations than disappoint. So we're trying to help manage those expectations, even though we don't have sell-side analysts that track us. There's still some influential people out there that I think a lot of people look towards, and trying to help get enough information in the public domain that could help them model that. That being said, as I mentioned, I think to Chris a little bit earlier, that run rate that we were at this quarter is really largely about the base case, right? If we are understaffed for a period of time and couldn't do that amount of volume anyway, then we may not get all those guaranteed fees, right? We got to be ready to jump in and do the work that we've committed to do. But assuming we're staffed appropriately, we've got everything there, that's largely a baseline. And then if we get volumes over that minimum commitment, then that's just upside. So I do think there's potential upside. When I look at the new facility, right, we've talked internally, given the power that we'll have there, given the validation stations, labor you can ramp up relatively quickly. So we believe, based on the facilities that we're putting in, don't go build this into a model, right? I just want to be really clear there. But the capability of what we could do if the volume is there is probably upwards of 3 times the volume that we saw this quarter. Again, don't come back to me a quarter from now and go, well, why is it not 21 million, right? You did 7.6. But at least in our discussions with our customer, they have told us, get ready, guys, the volume's coming and it's real. Like, we need you guys to get in your new facility. How can you get in there faster than you've told us you can get in there? Because we have got a ton of volume coming and we need you guys to help us get it out. Right. So we're trying to prepare ourselves to be able to take more volume than even what they've committed to, but not go make financial commitments that put us over our skis as well. Does that help?
Okay. Oh, that helps a lot. Yes. And that's that's really what you just said is more than I think what we understood. So that makes a lot of sense to me. Visibility. I want to talk a little bit about visibility. Is it possible, and I'm not asking you to say that this is the case, but when you're looking at it quarter four, quarter one, quarter two, for an example, do you know do you right now today know what your volumes are going to be pretty much, or is it possible you really don't know yet?
No, we don't know yet.
Okay. How far out would you say
I know what minimums have been committed to, but I don't know today In the AI rack building business, I don't know that today. We know some of the pieces that are coming, but certainly not all of them. And sometimes it can be, hey guys, we just got a huge order and we need you guys to mobilize, right? We need you to work overtime or whatever to help us make a deadline. That certainly, some of those come in at the last minute. That we talk a lot about flexibility and execution and partnership. That's where that comes in, right? Our partner reaches out to us because they know we're flexible and we'll find a way to make it happen. So those are ones that we don't know ahead of time. It somewhat keeps it exciting, but it's a little frustrating sometimes when it's a last minute request. The one that we've got a little more visibility on is probably the procurement business, because some of those are long lead time orders. Even within that, there can be fairly large orders that pop up out of nowhere. So I don't necessarily know exactly what it's going to be, but I've got at least a decent sight line kind of through Q1 of a lot of the stuff that we expect in the procurement business. The modular data center, the facility management business, that one we got much better line of sight on. There are unique ones, like if somebody wants to retrofit a modular data center or MDC, or if they want to refresh one or replace all the batteries in it. Battery replacement doesn't seem like much, but when you're talking $1 million worth of batteries, that starts moving the needle. So those happen every once in a while. I don't have as good a visibility to that when they might request those things. But the annual maintenance of those MDCs, those are generally renewed every year.
Okay. So summarizing part of what you said, it sounds like once you get in the new facility, you think Dell intends to start filling up your capacity. You're not sure
Yes.
how fast. You're not sure how fast, but you think they're going to do it.
I don't know that they'll fill the 3 times potential capability, but yes, for the minimum racks that they have committed to, we anticipate either getting that volume or being made whole for being ready for that volume.
Okay. I had a question about, I know it sounds like you're going to be switching to DLC racks more and more as you go, that's coming quickly. Can you talk a little bit about the economics for you for a DLC rack versus a traditional air-cooled rack?
Yeah, it's not really much different. The biggest difference is there's more capital investment in some of the DLC, right? Air-cooled is less expensive than the DLC. But as I think I was relatively clear, tried to be even more clear in this announcement, any of the CapEx that we are planning on putting in, we anticipate our revenues that we receive from our partner or from our customer being more than sufficient to cover all our costs, including debt service.
Okay. So on that multi-year agreement you referred to earlier, there's these minimum volume commitments. Let's say that that's triggered in a particular month or quarter, or however often you assess that, and you really provided less value than what that commitment was. Does that get trued up in a later period, or is that it doesn't? Okay.
Now, essentially, what it's saying, Brad, is our partner's been really good to work with on this. When I said, look, we want you guys to be ready for a certain volume. Well, there's a cost that comes with that, right? I've got to have the facility, we've got to have the equipment, we've got to have the people waiting to do that. If you got people sitting around that you're paying to sit there, I need to be compensated for that, right? And we don't do anything for free, so I need to be compensated plus a margin. That's where, how they've been pretty creative in helping work with us there. Effectively, it's sort of a take or pay agreement, Brad, where either they're buying it or we're still at least being made whole for the costs that we're incurring plus a margin.
Okay. Very nice. That's a nice, seems like a nice deal.
It was creative on both sides, and we're pretty happy with where we ended up on that deal.
Good.
Yeah. Really, the way we came at that was trying to figure out what are all the ways in which we might be able to take it in the shorts, and how do we mitigate that, right? You can never completely eliminate risk, but we've tried to mitigate a lot of that. Somewhere we'll go with them also, right? Just being a
Hey,
good
Brian, can I
partner.
get back to you after this TSSI thing with this breakout investors?
That's
I'm sorry?
Brett. That was Brett.
Yeah, what was
Okay,
that,
go
Brett?
ahead. That was Brett Moss. He was talking to somebody.
Sorry, guys. Yeah, I interrupted.
Oh, okay. I lost my train of thought.
Okay. Modular data centers. I don't understand. I do understand that, but I don't understand it maybe quite as well as the integration that I've looked in more. But it seems like the bottleneck there is the containers. I think you've communicated that several times. Am I understanding that correctly?
That's correct. Although I even learned some over the last several months that it's not just the metal box, right? When we talk about the container being the gating item, it's the container including the cooling system in it, including all the fitments that you need in order for it to be ready to receive computer racks. So it's not just bending the metal, right? It's a little bit more than that. But yeah, that's a long lead time item.
And you talked about the fact that the suppliers know that you've got to reduce the lead time. Everybody knows we have to reduce the lead time. I think Danny said that yesterday. Is there a solution in the works to accomplish that over time, or is that still a work in progress with no solution?
Unfortunately, it's probably more of a work in progress without a solution at this point. I wish I could tell you otherwise that had been solved. I don't think that's been solved today, Brad, which is where, we're thinking that probably doesn't really pick up for 12 to 18 months. I think number one, there will be more demand for it from enterprise. And I think the people producing those containers will certainly get better at it. As Daryl mentioned on the call yesterday, they're trying to figure out how do they accelerate it? How do they get better at that so that we can all go meet the demand that we know is out there. But I don't believe that's solved today.
And most of that demand will come from enterprise as opposed to the hyperscalers. Is that correct?
That's where we see it.
Yeah.
Yeah, there are some big organizations out there that, have 100, 150 modular data centers all in one center. But generally where we see the bigger opportunity there, at least reading the tea leaves, we see that more with enterprise where they may only need 1 or 2 or 5 modular data centers, and that's more efficient for them rather than building out a huge, data center halls.
Okay. You already sort of covered my SG&A question, but I'm going to try to pin you down just a little more. It doesn't need to go up as fast as revenues. If I were to want to try to model that out to say a number, is there a ratio I could, or a ratio range you could share that maybe I could be thinking about on that? Or are you that far along to where you really know? Or
I don't have enough in the public domain, Brad, to help you a lot there.
okay.
Where I can help you a little bit is when you look at this quarter, one of the comments that I mentioned specifically in the SG&A was that this quarter included some incentive compensation and commissions that are directly related to the outperformance of the company's overall results. So obviously, whenever you're setting the next year's performance goals or the incentive compensation plans, you set it up knowing what you delivered this year and you put a stretch out there, right? So even Daryl's in my commission or bonus, right, will be based on a much higher target than what it was this year because we're performing at that level. So there's some dollars in this quarter in incentive compensation that I would not expect to continue to occur at that same pace.
Okay, that makes sense. I have I think two more questions. Facility. I was hoping you could put this issue to rest for me because I've I've had debates with other people about this. My understanding is you're going to abandon your existing facility and move into the new facility, and that's the only facility you're going to use to operate. Now, I did hear a little commentary, either it was today or it was yesterday, I can't remember, about that you have this option of maybe subletting the old facility versus using it yourself. What is the plan on the old facility?
Yeah, so I think you're spot on. The plan at this point is to vacate the current facility and completely move to the new one. There would be some overlap of time, right? But ultimately, the plan would be to sublease the space that we're in today. That being said, we are also looking at this opportunistically and talking with our partner and others about, hey, we've got a 100,000 square foot facility that's about to be idle. We can put that to use. You've got other business that we would love to take over for you. So none of that is sold, right? So don't, I'm not giving you any inside scoop, right? We're always going to be chasing more business. But I believe there are some opportunities there that we are at least proposing to our partner, hey, let us take over some of the stuff that you got somebody else doing today. We can utilize this facility that we've already got and operate under two. But as of today, the planned approach is migrate everything to the new facility, sublease where we are today. And the rent that we're at where we are right now is probably 25% less than prevailing rates in the marketplace. So I think a sublease should not be too difficult. So hopefully that addresses the question.
Yep, it does. Last one I have for now, NVIDIA chips. I think that got snuck into the call yesterday, and maybe just a one little short sentence. How big of a bottleneck would you describe that to be for your customer?
You know, they haven't openly said that, hey, that is the gating item, but I think that's a lot of it, right? If you think about NVIDIA, that they've, you know, Jensen's been pretty good about allocating the number of chips and making it a scarce resource, and therefore the price is very high for our customer, right? He's done a masterful job of that. Given some of the pretty public challenges that our customer's primary competitor is having right now, I think Jensen's even said he's reallocating more of those chips to Dell than Supermicro. And I think that may present some potential upside for our customer Dell to get more allocated and therefore be able to build more. Some of it is a demand issue, but I think some of it truly is they've got the demand if they could get their hands on the chips.
Okay, great. Well, that's everything I had, and I wanted to roll back to Chris for any closing comments or thoughts or questions.
Yeah, no, Danny, you've been great. You and Daryl are always really great to talk to. And Brad and I just have one little small request, and that's if you ever get a phone call from Elon Musk to come out and have a beer with him at your local Chili's, that you'll invite Brad and I, or at least let us know that you're going out there.
I might not be able to do that if it's potentially leading to additional business, but he's certainly an interesting character. I'd love to split a beer with him.
Yeah. Okay.
Probably not at Chili's. We got a few better places than Chili's.
Right.
I love Chili's. That's funny. All right. Well, I think that will cover us for today. And I did want to say that if you take, I know the stock took a hit yesterday, but if we set aside any unrealistic expectations that may have been out there and just look at this quarter and what you produced compared to what you've been doing over the past few years, it's simply it's astonishing, and it's amazing. So
Thank you.
I hope investors will look at it that way and realize that that it's pretty remarkable how far you've come in such a short amount of time.
Yeah, I didn't have time to go back and check all of our public records going back to 2004 or whenever we first went public, but my suspicion is this was probably record revenues and likely record earnings for the company this quarter. Again, I can't say that for sure because I haven't gone back and looked at all those prior ones, but certainly in recent history, this was far above where we've ever been. So I'm certainly encouraged by that, but not satisfied, right? We need to go continue to grow it.
Well, best of luck with that, and we'll continue to follow with great interest.
Awesome. Appreciate it. Thanks, y'all.
Thank you, guys.
Thank you.
Bye.
Some or all the speakers may maintain positions in the securities discussed in this podcast. The views in this podcast expressed are those of the speakers, not Breakout investors. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. Neither Breakout Investors nor any of its affiliates makes any representation or warranty, express or implied, as to the accuracy or completeness of the statements or any information presented by this podcast and any liability, including in respect of direct, indirect, or consequential loss or damage, therefore is expressly disclaimed. No one on this podcast is an investment advisor. No one is providing investment advice. Before investing in any company's stock, you must do your own research. Thank you for listening.